Give a couple minutes to let folks join on, and it's just a little bit after 9 o'clock, so I think we'll go ahead and start our webinar. My name is Elizabeth Glidden at MHP, and we're here to talk about the State Housing Tax Credit and Contribution Fund, giving you some updates, giving some program overview. I'm going to be joined today by Mary Tingerthal, who's the president now of Tingerthal Group, Tom Johnson with Mahoney CPAs and Advisors, and Deanna Hemish, who's the executive director at Central Minnesota Housing Partnership. And we hope we'll have a robust amount of time for questions, because I know a lot of you have great experience with this program, and we're hoping to have a good conversation after we provide some updates. Next slide. And just a refresher for those of you who may not be familiar with MHP, we are a nonprofit that's been working in housing and community development for over 35 years. Our primary areas of work include public policy development and advocacy, creating original research, and we also work directly with communities, primarily rural communities and Native nations, serving them with capacity building services and technical assistance. This tax credit is something that we've spent some resources from all of these three areas working to develop at MHP. And I know we worked with, frankly, a lot of you on this call as well, working to advocate for this to be a new resource adopted into state law. Next slide. So this is just a snapshot of what we're hoping to cover today. I will give a very brief overview or grounding for us in what the program actually is. We're then going to turn it over to Mary Tingerthal, who will share more of the results and lessons to date, and some developer perspective from her conversations with many partners around the state about how this has been working. Tom is going to give some an overview of some accounting and tax considerations. And then Central Minnesota Housing Partnership has utilized the state housing tax credit for some of their projects. And so we're going to hear a little bit from Deanna Hemish on what that has looked like and felt like to date. And if you have questions in the meantime, I encourage you to use the chat. We'll probably hold on actually answering questions until all the speakers have had a chance to walk us through their presentations. But that will help us hold your questions for then. Next slide. So first, again, just a refresher on this program, which will provide almost 10 million in housing tax credits annually for 6 years. The program started in 2023, so we have just 1 year of experience. And I will say also that was somewhat of a unique year because the program started somewhat late in 2023. But we do have that 1 year, and we're trying to kind of build on that experience and continue to work with Minnesota Housing on what are the lessons learned in the field. The range of contributions is from 1,000 to 2 million, and those taxpayers receive an 85% state tax credit after they make that contribution. And also another feature of this program is that contributing taxpayers can either designate their contribution to a specific project or contribute to the general pool. Next slide. So this is just the overview of project requirements. As you can see, it was designed to be a very flexible program that could reach a broad range of projects, be they multifamily projects or single-family projects. The income limits match up to the Challenge Fund. So that's another piece that will feel somewhat familiar. And then you can see there's a broad range of eligible activities for use of the tax credit. Next slide. So the program also was designed in hopes that there would be a simple process for contributors. And again, I think we're just trying to understand how this experience has felt to both those with projects and those who are contributors. But here is the process that is also outlined on Minnesota Housing's website, where you complete an application if you are an eligible taxpayer, and you can designate your contribution to a specific project or request to do so as part of your application. And then there's a process where Minnesota Housing will review your application, send back a form to you, and then that's the time when the taxpayer would sign the form and also send those contribution funds to Minnesota Housing. And at that point, then they are issued a tax credit certificate. Next slide. I don't want to go deeply into this, but there are some contributors that within law are identified as disqualified contributors. And maybe just that could be an individual, it could be a business. The first bullet here that indicates that if you have made a contribution to the account in the current or a prior taxable year and received a credit certificate, I think that is getting at the intention of the rest of the elements here, which is they're looking that you kind of don't do a double dip. Next slide. Again, this is the list of eligible recipients and intended to showcase that there can be a broad range of entities that can utilize the tax credit for projects. Next slide. So, and I apologize, I misspelled Chrissy Mills' name at the bottom here, so we'll fix that when the slides go out. I just want to call out Chrissy was going to be part of this program and has had a family emergency, but she wanted me to express her regret that she wasn't able to be here. She is going to listen to the recording and will be happy to follow up personally with anyone who has questions. But Chrissy Mills is the manager of the State Housing Tax Credit Program for Minnesota Housing. Minnesota Housing also has some website resources, which we've featured here. There's a kind of overall program page that gives a good overview, a simple overview of the program and links to the state law and other resources. And then there's a way you can go to a specific web page for contributors, which lays out the process for making a contribution. Next slide. One thing that is not featured in the Minnesota Housing website is a list of projects that you could make a contribution to. So this is something Minnesota Housing Partnership has developed a web page that in partnership with Greater Minnesota Housing Fund and with the help of Mary Tingerthal, designing this webpage, which allows you to submit a project, and then that can be a way that we can point potential contributors to a little bit more information about your designated project. So these are just a couple of examples of some of the projects on the website. There's a simple form on our website where you can submit a project and then be able to feature that as an opportunity for designated contributions. And I think Mary is going to delve into a few more of these topics in more detail, but if we can just turn the slide, I think that's the end of my, yes. So that's the end of just a simple overview of the program. And so now I'm going to turn it over to Mary to go into a little bit more detail about what have we been learning to date and what are some lessons from the field. Mary.
Thanks very much, Elizabeth. I'm Mary Tingerthal, and some of you know that I served as Commissioner of Minnesota Housing for 8 years in the Dayton administration. And we actually got started advocating for the creation of this state housing tax credit while I was still commissioner Didn't pull it off until after I left, but I'm really thrilled that we now have this new tool in the toolbox. And I have to sometimes remind myself that this was a very bipartisan bill. The key sponsors were Senator Carla Nelson out of Rochester and Representative Mike Howard, who now is chair of the House Housing Committee. And they're both pretty fierce advocates of this tool and have been pretty vocal about the fact that they would like it to support housing, not only that's already in the pipeline, but housing that might otherwise have a hard time getting done. And so they've been helpful over the last year as the project has finally rolled out and are continuing to be supportive as we go forward. So there's $60 million on the table here over the next 5 years, with 1 year in the rearview mirror. As Elizabeth said, it provides 9.9 million in credits every year. But to do the math, remember that that means your projects can actually collectively get 11.6 million in contributions each year. So that's the total amount of contributions that can be attracted. If you do the math, that calculates back to 9.9 million in credits. And the way the program works is that it's a first come, first serve basis. And if at the beginning of December, we still have not exceeded the 9.9 million available this year, there'll be a deadline that'll be established by Minnesota Housing. I think last year it was December 13th, when all contributions for the year had to be applied for. So we'll hopefully be getting a lot closer to that number than we did last year. To give you that number from last year, even though we started our campaign around the 10th of October last year, we were able to attract 6.92 million in contributions. So taxpayers across the state received almost 5.9 million in tax credits. From everybody that I have talked to, the process really went very smoothly for the contributors. And the sad part is that if contributions are less than the total amount, there is not a provision that those credits can be captured the following year. MHP did advocate for this first year of 2023 to try to carry forward just for that 1 year, since we got off to a late start. We came very, very close to accomplishing that, but didn't quite get it across the line. So we did leave roughly $4 million on the table last year, and I hope that we don't do that again this year. So far this year, we're at about $2.5 million in contributions that have already been received. Next slide. So the challenge for all of us in the affordable housing community is to get people to know about this credit. What I've found personally as I talk to people that I know are supportive of affordable housing, their initial reaction is, I can't believe that this program actually exists. And then it's, you really mean that I get an 85% tax credit for the dollars I contribute? And when I answer yes to both of those questions, then it's a little bit of a detailed conversation about, well, why this program, and why are we doing it this way, and does it really work? So the challenge for all of you, if you do decide to dive in and look to bring in contributions for your projects, is that it's new. It's pretty unusual. You don't have a lot of examples to point to, although some people have told me it's a little bit like the angel investor credit that's run by the Department of Deed. Last year, finance professionals were almost entirely unaware of this. And we've made a little bit of a niche in that. The awareness is growing. And at least this year, the Department of Revenue does have on their website a page that talks about the state housing tax credit, which was not the case last year, which made it very tricky for tax professionals who might be a little skeptical that this thing actually works. There is the ability for contributors to specify their contributions for designated projects. And what we really learned last year is that that makes a big difference to people. There aren't a lot of people or companies that want to just make a big contribution without knowing where those dollars are going. And frankly, the developers who actively informed their potential contributors received the most designated contributions in 2023. It's a direct line from if you tell people about it, you promote your project, you're much more likely to get contributions than if you're passive about it. Next slide, please. One thing I want to talk about is that designating a contribution to a specific project is really quite easy. When a contributor goes into the Minnesota Housing Finance Agency website, it's a pretty simple form that has to be filled out with their name and certain information. And then they get to a box of whether they want to specify their contribution to a qualified project. When they check that box, they get a little form to fill out that has really pretty minimal information, the type of project, its name, its developer. And importantly, that last bullet, if you happen to have a legal affiliation with the project, you do have to provide some more information. But if you're unrelated to the project, that section can be left blank. Next slide, please. Elizabeth talked about the fact that MHP has stood up a page on their website where developers from all over the state have the ability, free of charge, to list a project for which they are seeking designated contributions. This is an example of a project from Central Minnesota Habitat. It really is this simple. And what you see on this page is an example of the information that your contributor will need to have with them to plug into the Minnesota Housing application website. And unfortunately, we've explored the idea of whether we could automatically populate the Minnesota Housing application website, and that just proved to be a bridge too far. So what we're suggesting to contributors, it is possible to simply print the page for the project that you want, if you'd like to do that. And then you can have it in front of you when you're typing in your information on the Minnesota Housing Finance Agency website for the project that you want to designate. Next slide, please. So what did we do last year? There were the total contributions of 6.9 million, almost 400 people and corporations around the state did make contributions. And of those, 5.1 million were designated contributions. So you can see it's almost 75% of all the contributions went to designated projects. There were 6 projects that were homeownership, getting around $250,000 total. Rental projects, 13 of them got almost $5 million. There were some fairly large contributions, and literally the contributions did cover the entire eligible range from $1,000 up to $2 million. So we did get a few large corporate contributions, and I'll talk more about those in just a second. We also got some spread between Greater Minnesota, 7 projects, and the Twin Cities Metro. There were 12 projects that received contributions. I'm really glad to see in the attendee list here today good representation from across the state. My work on this is being supported by the Greater Minnesota Housing Fund, and they're really bullish on how how this tax credit can be combined with projects that might be getting financing in Greater Minnesota. The general contribution pool was about 1.8 million, and that is currently being awarded for single family projects. It was done through the Impact Fund, and there was a special RFP for multifamily projects that just closed somewhat recently. And the hope was that some of the projects that did not get funding through the workforce housing program might find this as a way that they could apply for some additional funds. Next slide, please. So as you think about how you might approach this as a developer, there are two things to think about. What are the projects that might make good candidates? What might be appealing to potential contributors, or you can think of them as investors? What might really appeal to them to write that check and go in and get these credits? First of all, you have to figure out if they're qualified projects. That's pretty basic. Then are the projects likely to have all of the funds they're going to need to close within 24 months? The way the process works at Minnesota Housing, you have to have all of your dollars before you can claim your designated contributions. And that's really to protect against those dollars going out and then the project never being built. So we're working with Minnesota Housing to streamline some of those processes. And I have to say, Chrissy Mills has been great to work with. And in particular, some of the single family developers in greater Minnesota have worked with Chrissy to streamline some of the processes for some of these smaller projects. We've got some proposals on the table with Minnesota Housing to streamline them even further, especially for those projects that get a relatively small amount of designated contributions. So stay tuned on that. But by the time developers would be claiming their contributions next year, after this year's round of contributions, I think we'll see some improvements along that line. Then you need to figure out how are you going to work this into your overall capital raising scheme. If you're a for-profit developer, thinking about where there might be contributors, investors who don't have an affiliation with your project. And this might particularly be employers in greater Minnesota communities that are interested in supporting employee housing. But thinking about what's a good fit and who might those contributors be. If you're a nonprofit developer, you might think about who are some of your major contributors and go out to them on a one-by-one basis and ask them if they're willing to do a both-and approach. So if somebody is making annually a $5,000 contribution to your organization that is a charitable contribution, they can make an additional contribution to this contribution fund and shield more of their Minnesota tax liability. In just a minute, Tom is going to talk about some of the tax implications. And they are pretty favorable, but I really do think this is a way to get strong supporters to step up with more dollars and take advantage of this very important resource. And that list of projects is on the website. We are making some improvements to the website over the next month or so, where the projects will show up in random form so that it isn't always the same projects at the top of the page. And that probably will be in place in about 3 weeks for those of you who have used the project listing in the past. Next slide, please. And this is my last slide. I wanted to talk about what my experience was as a contributor last year. I literally sat down with my financial advisor. We figured out what my Minnesota tax liability was going to be, did the backwards calculation, and I decided that I was going to make a contribution. And what I did was I went and looked at the projects and decided on a project. And I happened to select a project that's about half mile from my house, Project for Pride and Living's project up at the new Highland Bridge development in St. Paul. And I picked that project. I went in, I filled it out. I received an email from Minnesota Housing, signed the documents, and then There's a time period within which you do need to submit the actual dollars uh, by either bank wire or check. And what I learned is that a lot of people don't think about their tax liability until the fourth quarter of the year. And a lot of people don't want to actually write that check until they're as close as possible to the end of the year. Now, the first come, first serve thing kind of comes into play here. So if you wait too long, you might miss the boat. But hopefully, we'll be at that level of demand by next year. But thinking about when you want to write that check is an important consideration. And then you literally receive via email a tax credit certificate within 30 days of sending your dollars. Um, that certificate has to be filed with your tax return in the year that you receive that tax credit. So if you receive a tax credit this year, you'll have to file it with that 2024 return. But if you happen to guess a little bit wrong about what your tax liability is and you contribute a little more than you're able to use, you can carry that forward into a future tax year. And importantly, this year, which was not quite in place last year, the certificate will include language that supports the filing for an additional federal charitable deduction for the 15% that you don't receive back from Minnesota. And Tom will talk about that in just a minute. So I have to say, I was pleasantly surprised with how simple the process was, how straightforward the process was, how helpful the staff was. And it wasn't just me, but I talked to other contributors as well who found the process really, even though it's a little strange, even though it's a little unexpected, to be pretty straightforward and easy to use. Turning it over to you, Tom.
All right. Thanks, Mary. I appreciate it.
Move
You
one
did a
more.
great, can you hear me? Yeah. You did a great job explaining the process. I think the beauty in this whole program, it may be strange and different, but it's in its simplicity. It's pretty straightforward. It's easy to calculate. You said it yourself. You sat down with your CPA and could figure out how much you can contribute. Just an introduction. My name is Tom Johnson. I'm with Mahoney, a CPA firm in St. Paul. We work with a lot of developers, a lot of people on this call right now. We saw several contributions similar to what Mary did come through our office last year, so we have a little familiarity with it now. But it's straightforward. It's a 85% calculation that pretty much anyone can do. You don't need a team of attorneys to figure out how to use your tax credits. Next slide. I think Mary did go through some of this and Liz, but eligible contributors, really it's any person or corporation subject to Minnesota tax. It's as simple as that. The tax credit's 85% of what you contribute. The contribution amount used to calculate the credit can't be used to claim any other Minnesota deduction or credit. So you can't use it, the 85% credit can also be a charitable deduction on your Minnesota tax return. Can't double dip, in other words. The federal benefit, Mary briefly mentioned this, but the 15% is a charitable contribution. So on the federal side of it, if you're going to give $1,000, 85% is your credit. The other 15% can go towards your itemized deductions and charitable contributions. Next slide. I don't know what happened to that one. Non-residents and part-year residents have to allocate the credit based on their percentage of Minnesota income versus federal income. Partnerships and LLCs and S corps can make contributions and they get passed through to the partners, similar as any other partnership. and the tax credits are not subject to recapture. I think the missing piece right there was it's a 10-year carry forward. That was the biggest piece, and there's no recapture. Next slide. So claiming the credit, again, we've seen it. This is what the state housing tax credit certificate looks like. Generally, it'll be signed by Minnesota Housing. So once they issue it, they sign it, you've contributed to the fund, you'll get this certificate. Once you get that certificate, there is a Minnesota M1C, non-refundable credits, and you just put the tax credit certificate number on that form, as well as the amount of the tax credit. And then that flows through your Minnesota income return. Similarly, if it was a partnership, you would have your Minnesota equivalent, the K1, that says to put it on this M1C with the state housing tax credit certificate. So it just transfers directly over. It's very simple. Next slide. I did this same example last year, but this is just to show the basics of the calculation. If you have a tax liability of $10,000 and you don't want to pay that Minnesota income tax, you have to contribute to the fund $11,000, $765. You'll get the 85% tax credit that goes onto your tax return, and you don't have that Minnesota tax obligation. The federal benefit side of it, you can't use the $10,000 credit, but the leftover 15%, the $1,765, if an individual is in the highest income tax bracket at 37%, they get a benefit of $653 off their federal taxes. So overall, you have the state benefit of $10,000, the federal benefit of $653. You're up to, you receive 90% of your contribution back. I think I still get this question, and that's there is a cost to this from a donor's or contributor's perspective. You have to put out $1,765 in order to get this $10,000 credit. So there's why would we do it? Well, there's the philanthropic angle to it. I think Mary's talked about, and there's also, if you go to the next slide, I think Mary briefly went into this, but there's leveraging. So can you go to the next slide, please? There's a leverage multiple, and it's around 6.7. But if you have a donor who's going to contribute $1,000 to a nonprofit, the cost to them is $1,000, excluding any federal benefits of that. It's just $1,000 cost. Instead, if you say, well, let's contribute to this state fund for a project, they can contribute $6,667. They get the 85% tax credit. They're down to $1,000. So the donor, the contributor is out $1,000 out of pocket cost either way, but the nonprofit or the designated affordable housing ends up with $7,000, 7 times that amount. So it's a great way to leverage money to get more for what's actually coming from your donors. Next slide. I think that's it. So that's really it. Again, the beauty is in the simplicity of it. I'm happy to take any phone calls or questions or emails. Thank you.
Thanks so much, Tom. Appreciate it. So next, we have Deanna Hemish, who's going to talk a little bit about Central Minnesota Housing Partnerships experience. Deanna.
Yeah, hi, I'm Deanna Hamish. I'm the Executive Director of Central Minnesota Housing Partnership, and we cover 16 counties in central Minnesota, so we're not very designated to a specific city or county. We cover 16. So my experience with the program might be a little different than someone who's more localized. But just to make sure everyone is clear, we have received an allocation of funds, but we have not accessed the funds yet. So the projects that we're talking about today, neither one of them received funding from Minnesota Housing, but they do have some allocation of tax credits associated with it. So I'm kind of here to talk a little bit about how I engaged people or how we got people involved in the tax credit program. Next slide, please. So the two projects I will talk about a little bit today is a workforce housing project in Hackensack, and then a senior housing adaptive reuse in the city of Eagle Bend. So those were the two that we kind of focused on. Next slide. So what did we do? So we wanted to use the tax credit program, one, to fill a gap that we were experiencing in our projects. And then also to, like we had just talked about, Mary and Tom and everyone else, is to help to leverage additional dollars through the Minnesota Housing RFP request for proposal application process. So that's kind of what we were using it for. That's how we identified it when we were speaking to the communities. So what do you need to know about engaging or leveraging some of these dollars is people, like Mary said, want to help their community. So if there's a project in their community and they want to help the project, this is a great way to do that. However, they don't know about it. So you need to really figure out a way to reach the people who want to help their community, but don't know how to do that. So my suggestion is get to know the people who know people, right? So like I said, we cover a really large area. I don't know the local people in town who are the people who know people, the movers and the shakers, the people who get things done. However, I was fortunate enough in both of these projects to meet Gary from Hackensack and Verna from Eagle Bend. And both of them are people who know people. And they were able to either connect me with people, or they were able to find out enough about the program to go to different organizations and different people within the community to access or to give them the information so that they were able to contribute to the project specifically. And making them know about the program is very, very important, or making them know about your project is very important. So giving them the information that they need so that they have a flyer or something along those lines, and then providing them with the local, the link to the Minnesota Housing website that gives them the detailed information, because I am not Tom, I am not a tax person, and I do not want to get involved in your day-to-day tax liabilities. So I can give you the broad information about what it is, but then I tell them to go to Minnesota Housing and talk to Chrissy Mills, talk to someone else. But the biggest thing in my experience in working with this and getting some of those dollars is to get to know the people who know people within your community, because they're really the people who can connect you to the people who want to help in the community, and the people who have the dollars to leverage to make that contribution to the state housing tax credit. And the next slide is just my contact information. So that was it for me.
All right. Thank you, Deanna. Really appreciate all the information here. I know we have quite a few questions hopping around in the chat. And I think, Brian, we would be able to take down the slide presentation so we could also see raised hands, but maybe let's just take a look at the questions in the chat first. There had been a couple different questions about essentially this, when is a taxpayer disqualified for making a contribution? And I did have a reference to that in one of my slides. I don't know, Mary, if you wanted to talk about that at all. Otherwise, I can also, I've pulled up the language I can read. And I just wanted to note, I think Ryan Baumtrog is on this call as well. Not to call you out, Ryan, but from Minnesota Housing, but thanks for being here as well. I didn't know if you had any feedback on that one, Mary, if you just want me to kind of reference folks to the.
Yeah, what I would say is
Hmm.
my understanding of the intention of this part of the statute is that legislators were concerned about individuals who have an ownership or financial interest in a particular project and therefore stand to, um, over the years, benefit from the project, that they be able to get a tax credit on the front end of that project. There's a lot of technicalities to this particular provision. So my advice about this is that if you are a for-profit developer that is looking to bring investors into this, that you probably have a conversation with your legal counsel to interpret, and probably also your financial folks, of who they believe would be excluded from those that could make a contribution to the project. But just to give you that intent of why this was included in the legislation.
Yeah, I would agree with that, having been part of that advocacy around this issue. I also will say I think the lawmakers had that intention, and then they kind of had a hard time then thinking through all the scenarios where it actually made sense. But I've put the link to the statutory language in the chat, and we'll send that out again. And yes, it is looking, one of the elements it's looking at is whether you have made a contribution in the current or prior taxable year and received a credit certificate to that particular project, either as an individual or as a business. I think there was a question about, as a family member, could you make a contribution? Yes, as a family member, you could make a contribution unless, as a family member, you had an interest in a business that had made that contribution. And I think 20% is the interest that they're looking at. So again, you really need to read that statutory language to make sure you're understanding who it might apply to so that you're making contributions and don't run afoul of this disqualified individual. Let's see
Tom,
here.
I saw you came off mute. Did you want to
Oh,
add
good.
something here?
Yeah, I mean, I would just add that I did say it was simple. This is the one area that's complex. I mean, part of that is because a lot of these real estate structures, hierarchy is complex. You have to look to IRS code 267 for what's a family member, brothers, sisters, lineal descendants. I think you have to look at each deal individually. If there's any sort of relationship, I think that's an area you got to talk to your CPA, your attorneys, see if you can do it.
All right, so we had another question from Jen at Southwest MHP that's talking about if you post a project and that's in pre-development and that project doesn't end up getting funded and the deal somehow falls through, clarifying what happens to those contributions. And she writes here, but there are contributors that have chosen the project. Those contributions then go into the general pool versus we have the opportunity to work with the contributor to redirect those funds to another project. What's the correct answer? So I think that is, I'll just note that's something we're trying to gather some more information on and just kind of hear what's happening. Mary, maybe you can talk a little bit because that has come up in some of the background that you've been talking to folks about too, as we're just looking at what's the experience with the program and what's working and what's not.
There are some, I'm sorry, I was looking at another one of the questions in the chat. Can you repeat for me, Elizabeth?
Yeah, I guess I would say the answer to Jen is that yes, if the deal falls through to the designated contribution, at this point, it would go back to the general pool. I think Mary Mary and I are both working on what might be next steps in terms of are there any suggestions to make to Minnesota Housing that they could administer do within their own power, or are there things that we need to bring back to the legislature that are important enough we want to advocate for a change in the statutory language? And so this is something that I think we're looking at, how important of an issue is it and what are the potential fixes? But that's the current state of affairs.
Yeah, and I'll add just one thing. Thanks, Elizabeth, for restating that. One of the things that we have determined in conversation with Minnesota Housing is that they do have some flexibility in allowing you to, for example, define, let's say you're doing single family development within a given area, and you are going to be doing multiple houses in that area, that a more general description when you're getting the designated contribution to say that it's for the XYZ subdivision, rather than saying it's for the individual house at 123 Elm Street, so that there is a little bit of flexibility for using those dollars within a somewhat larger project. Now, it's not absolute flexibility along those lines, but there is a little bit of wiggle room to be able to keep those dollars within a designated project. As Elizabeth mentioned, there are some conversations about whether there could be some additional flexibility for keeping those dollars in a geographic area, but a broader flexibility like that would take changes to the statute. So under consideration, but if you do have a project that falls through, those dollars would go into the general contribution account, unless there was a more general description of it.
All right, we've got more questions. I wonder if we want to just like pop through kind of quickly. There's a question about income restrictions. I didn't know if you want to say something about that, Mary.
Yes, I would like to take that one from
Go ahead.
Brianne. The good news here is that it does not require that an entire project be income restricted. So let's take an example of a 50-unit building that gets a contribution in order to enable, let's just say, 4 units within that property to be income restricted. That is a feasible thing to do, so that you can essentially say the dollars that I'm getting are going to help me write down the rental rates on those 4 income restricted units. So it doesn't mean that your entire building has to be income restricted. You can target the dollars in such a way. You have to demonstrate to Minnesota Housing that those dollars are actually contributing to the income restricted units, but it's not required that the entire project, in the case of rental, be income restricted. It's a little different, of course, in terms of single family, where you have a single home, so that limit does apply to the initial buyer of the property, that they must be below 115 AMI for ownership properties.
I just wanted to call out, Jen had some follow-up comments to your earlier question. Jen, are you on there?
I am. Sorry, I was then typing my follow-up. I guess just, as you're sharing it, back to the board for consideration of change of statute, we as both a developer and asset owner, maybe are looking at different projects, meaning, apartment buildings or things in a community. And so a contributor might choose to support a new development for their community, but if that falls through, may wish to support an existing property in that community, really wishing to support their community, and they wouldn't have that opportunity to then shift their funds to support local, then it is going, statewide, and that might be a disappointment and maybe preventing future contribution as well. So not necessarily looking at like one house versus another, but maybe even just larger property investment for either their community or the surrounding community, which we know in rural Minnesota, an apartment complex in one community might help an employer in the neighboring community. And so it'd be nice to have that option for them to support workforce housing in their general vicinity. Thank you.
Right. Jen, great comment. And we definitely have gotten that comment from projects that got designated funds last year and unfortunately did not get the rest of their funding. And so that's why these conversations with the agency are ongoing. And but it would take a statutory change in order to make that change. So I'm sure you hear more from MHP about whether they or some other advocacy organization may decide to take that up next year. But it has been expressed as a concern and is being actively discussed.
Thank you.
So I don't see other questions in the chat. We're coming close to the end of the hour. Just want to kind of give a last opportunity if someone has a last question they'd like to, or comment that they'd like to share about their own experience. That would be great to hear too. So just opening that door.
Yeah, I want to jump in with a couple of other thoughts, Elizabeth. And I noticed that Devin Pullman from Habitat Minnesota is on the line, and she's worked with a number of the Habitat chapters around the state as they have worked to claim the dollars that they got in designated contributions last year, and have worked through a lot of the administrative niceties of working with the agency to claim those dollars. So I don't know, Devin, if you have anything that you might want to add in terms of lessons learned from working with some of the Habitat affiliates. Because I saw that you jumped in and responded to one of the chat items here.
Yeah, thanks, Mary. This has been such an incredible tool. And as Deanna said, it's a tool that can help you leverage relationships within your communities and really leveraging kind of those board relationships to try and raise additional contributions in a really meaningful way. So just really want to encourage, I think that's one key learning on the Habitat affiliate side is it's a great relationship lever and to see who has tax liability in your community and a way to contribute locally to a project. On the single family side, we've had to work through a few issues around how we define a project because really the agency does want to see that you've raised your full construction budget. So if you're building in a subdivision type of project with multiple phases, there are some tips and tricks for how to define that currently. And then as Mary indicated, we really continue to appreciate the agency working with us to think about how we can create some flexibilities there because we are seeing investors have a demand and an interest in more scale. And sometimes it's hard to prove your full construction budget out when you're building in phases. So appreciate the agency continuing to be a partner kind of in those conversations. Just want to encourage the Habitat affiliates or any of the small affiliates, feel free to reach out to me. I'll drop my contact information in the chat, especially if you're doing something on the single family side, because we have been able to navigate this well. And our first affiliate closed on a transaction in September. And it's been an incredible resource and just a great way to expand investment at the local level. So really excited about this and appreciate the agency's support in making this work at the local level. Thanks, Mary. And thanks, MHP, for hosting.
Thanks, Devin. Appreciate it.
Liz, I think there was a question on the making a contribution 2 years in a row to the same project.
Do you want to answer?
You can do that, I believe. The disqualified individual is you can't make a contribution and then receive those funds. So if you've made a contribution, you can't go in and then receive, you're a disqualified individual. You can't designate one of your own projects to receive funds. So you can make multiple contributions to the same project. That's fine. It just can't be disqualified.
Thanks for clarifying that, Tom. There's a question from Barb and some exchange with Elizabeth in the chat. I think it's important to remember you do not have to have all of your resources, whether it's a tax credit allocation or other resources, at the time you solicit designated contributions. However, I think it's important to be really thoughtful about which projects you're going to designate in a particular year, because once you get the designated contribution, the clock starts ticking and you have to be prepared within 24 months to have all of your other resources that you need for that project in order to claim it. And so thinking about what's the right timing for when you want to seek those designated contributions. Is it, after you learn that you have other funds allocated, but then, are you as competitive in the RFP? So it is a little tricky, but you do not have to have all of your funds identified or I should say secured at the time you seek a designated contribution, as long as you think you can get everything together within 24 months.
So we are right at the top of the hour. I want to make sure we're able to say thank you to Mary Tinkerthal, Tom Johnson, and Deanna Hemish for sharing their expertise. And thank you to all of you for great questions. See Devin's put her contact in the chat, and appreciate that. I think with that, I'll just note that we will send out a follow-up message that has the resources that we shared in our PowerPoint presentations and a couple other follow-up directives, and hope you all have a great day. Thank you.
Thanks, everyone.
Thank you.